Hey traders, Raghee here. Welcome to Charts and Coffee. Happy Friday, everybody. Yet another wild and wacky week, but we know what the market's concerned about, whether that be debt ceiling and the relief rally, the sigh of relief rally that we've been seeing in equities, or whether that is a slightly, and I do mean slightly, more hawkish central bank target rate probability expectation that's been factoring very slowly into Fed fund futures. That's been driving yields higher. That's been driving the dollar higher. That's been moving gold around. So we have two very different narratives moving two different groups of our overall markets. We have our indices reacting to one narrative. We have our yields, gold, currencies reacting to another. So this is an extremely important week because once we get the debt ceiling concerns, for the most part, out of the way, we'll end up factoring in those target rate probabilities and what the Federal Reserve is going to do next. Next meeting is in June. We'll talk about that in a bit. So as always, thank you so much for being here for our Caffeinate and Dominate 20 minutes. And hope everyone's going to have a great morning. All right, so let's see what we've got here. Kicking off the questions. KR asks, do I ever think, oh gosh, an AI question. Okay. Do I ever think AI could take over trading? You know, when I get asked about AI, and I've been playing around with Bard, I've been playing around with the Bing, which uses ChatGPT 4.0. I've been playing around with the ChatGPT OpenAI, learning how to prompt. I've been doing that for about, I guess, 2.5 months now, getting better at it. It's not that difficult. It's just a mindset. And what I have come to the conclusion, KR, is, and it depends on the field, will it overtake trading? It's going to help with investing. I've been finding some interesting prompts for investing. Longer term trading, I've been finding some interesting longer term. People who know how to use AI will be able to outperform people who do not. So that's the way I look at it, right? It's not that AI is going to take someone's job. It's someone, and I'm not talking broadly across multiple services and jobs. I'm talking just generally. My opinion now, again, just only 2.5 months of really digging in deep and learning how this works and so forth. People who know how to use AI could take over trading. Yes. But again, I don't believe it's going to be short-term trading. I don't believe it's going to be day trading. It's likely going to be longer-term swings or even investments. That's my very limited experience. All of us have fairly limited experience with AI. Something's changing every day. I think content creators, right? The more creative branch of work is going to be affected by AI more so than what we do as traders. So I am fascinated by it. I've totally become fascinated by it. All right, next up, Pat asks, could I talk about ZB and SI? Sure, let's talk about the long bond and silver. Now, are they related? Not necessarily, but they're two very interesting and volatile symbols that we're watching. First of all, what are we thinking about when we're looking at the long bond? Yields. If the bond market's moving lower, this includes TLT, we are going to have higher yields, and that's exactly what we're seeing. Because when we take a look at expectations from the Federal Reserve, there is a pesky little 1/4 point hike that's not probable, but it is growing in possibility. That's going to get yields moving higher. That's going to get the dollar moving higher. When we move on to silver, silver is an interesting metal. Silver is a metal that when I try to understand its nature, I think about it as a little bit like gold, a little bit like copper, a little bit attached to the real interest, the real rate, let's try that again, real yields or real interest rates, and copper, which is more manufacturing, more economic optimism. Silver lands somewhere in the middle of those. So silver really is not something I would say is going to move always with gold or necessarily always with copper. We saw a big sell-off on Thursday, the 11th, and I have yet to see really a confirmation by way of a minor low that would get me in. But I think it is interesting that when I take a look at the volume-based support level on this chart, looking at the visible range volume profile, what I have here is a point of control acting as support in silver. All right. So that is that. All right. From our simpler training room, RPJ asks about Comcast. All right. Let's take a look at Comcast, looking at the daily chart, obviously rocketing higher. You can take a look here. We do have some headlines. What I would say with Comcast is this. So long before a move higher, there are going to be signs. So take note of this on any chart that you're watching. So before a significant move higher or frankly lower, there are going to be signs. So first of all, where is price in relation to the 200 exponential moving average? For me, that's criteria one. Is it in the bullish or bearish hemisphere? The second criteria is, and probably the most important, and this applies to everyone, and this is where my multi-trend indicator helps me the most. It's probably the most important thing on my chart. What is the underlying environment? Is it up? Is it down? Is it sideways? In this case, my multi-trend is green. Green means go, green means bullish, and that means being above the 200 and having a green structure in the structure of, well, in this case, the daily chart of Comcast is going to indicate the path of least resistance is up. So when we shoot up like this, that's not necessarily helpful to me as a trader because I'm not going to buy into a new high, especially after such a dramatic move like we saw yesterday. However, it does tell me I want to be a buyer only. And if at the end of every bit of analysis, the final thing isn't I'm going to be a buyer or I'm going to be a short seller, keep moving on because you really want that directional bias. All right, moving on to our next question. Kelvin asks, what are my thoughts on Walmart? All right, Walmart, one of the key symbols in the staples, one of the key markets that when we think about Walmart, we think about Walmart in the same vein as sort of the defensives, as the staples. I do want a trend here, right? I do want a trend. And I do want to see price above the 200 propulsion, both those things we have. So while this isn't maybe the strongest trend that I've seen with the most recent volatility, I'd rather be a buyer. So then I'm going to rely on my automated support and resistance. This is my Darvis 2.0. And you can see that it's sitting at 149 and a half and 148, call it 148.20. In that zone, the way I imagine that, quite literally, and then I've got a little bit of volume here as well. I imagine there are buy orders there, literally people waiting for the market to come on down to that zone, at which point we will find those limit buy orders triggering. And as we punch up to higher highs in that zone, buy stops will trigger. And it's that kind of action, that buying that's just waiting for the opportunity. We could see it happened once on right here, Wednesday, May 17. Look at that wick. It went right into that buy zone and those orders got activated. And that's what I'm going to look for ideally in something like Walmart. Definitely bullish bias. All right, next up is, can we take a look at ENPH? Oh, on the weekly. I like that. I like it. So longer term positions. And this is, I'll tell you, one of my favorite sessions that we do every week in the Sector Secrets Mastery is take a step back, look at the weekly time frames. You mentioned ENPH here, Martha. And I like to take a look at the larger tectonic plates of macroeconomics. Those are far slower moving, but still very powerful. Think tectonic plates and earthquakes and volcanoes. So they're important. We have a test at a point of control here. If I go back to 2021, January, I'm sitting at the weekly 200. That's the equator. We are still barely hanging on to the bullish hemisphere. And Martha, if I take a look at a minor low on the weekly time frame, that minor low, if I zoom in here just a bit, that minor low did fire off as price action got through. You can see here the 166.64 level. So once we get above that, for the most part, at the 200 plus the minor low price-based pattern, that's a potential buy follow through right there that I'm looking for. It's a buy zone, and now I'm expecting follow through to the upside. So thanks for the question, Martha. Next up, can we look at Home Depot on the daily? Sure. Home Depot is going to land us in a couple of interesting places. One, it's going to land us in the Dow. It's going to land at, well, a few places actually. The Dow, it's going to land us in the XLY as the third highest concentration weighted stock. High weighted concentration dominates the indices. It dominates the sectors. Home Depot is very heavily weighted in XLY. And of course, take a look at things like ITB and XHB or home builders or home construction. Home Depot is still below the equator and it is neutral. So if there is a support level to be bought, well, let's talk about the automated support and resistance of the Darvis 2.0. I'm not going to draw. In fact, much of my career now is automating things that I used to do manually. So it adds speed, it adds accuracy. And for traders who are struggling with the learning curve of trading, everything's automated. So what I would have done manually 30 plus years ago, even I'm using the automation. I love it. The automation tells me, editor, the automation tells me that the area around 280 has been support. And then the next level up is about 284. So between 284 and 280, once again, in a sideways market, as we get down to that area, I'm looking at those buy limits sitting there. Those buy limits create support. Off support comes the momentum trades as we move incrementally higher to maybe intraday or weekly newer highs. Buy stops get triggered. So we start to see all this buying momentum build in that zone. The Darvis identifies that for me. That's what I'd be waiting for. But to the upside, we kind of have a cap here, at least for now, whether that's the volume ledge sitting at about 297.5, or whether that's the 200 propulsion sitting at about 302. We know that once we get to those levels, the climb is going to be far more difficult because, again, we still are in that bearish hemisphere on Home Depot. All right, next up, we have Costco. Oh, sorry. Next question is, can we take a look at gold? Sure. So if we're going to take a look at gold, I'm looking at gold pretty much exclusively on the longer term. So whether that be hourly, maybe daily, even weekly. And gold, some of these things, some of the things in the market that are sort of the marketisms, the fortune cookie wisdom sort of in the markets will dictate that gold is a flight to safety. It's not, right? What it does do is move based upon something called real yields or real interest rate, which is the nominal yield of a bond minus the rate of inflation. When that chasm narrows, right? In other words, it's less, what we'll see is gold move lower. When that chasm is greater, gold moves higher. Or another way you can look at this, it's easier to think of it directionally. Go to the interwebs, and all you need to do is pull up a chart of, here, let me see if I can't pull this up here. All you need to do is pull up a chart of real interest rates. And if you take a look at real interest rates, and that's here on the far left of my screen, when we have real interest rates, which is that blue line there, maybe it's a little bit easier to see light. When you see that blue line starting to tick up, that's going to be gold moving lower. So it is a negative correlation. And that's what I'll look at to understand what's happening with gold. I don't fear that gold is going to start moving lower and turn into a downtrend. However, when you look at the overall support here, oversold stochastic and some Darvis support, yeah, we're in a wide zone. What can we do to minimize the uncertainty in a wider zone? Use a, here we go, use a slow stochastic, all right? So mark it on my mind, inverse relationship to real interest rates, use a slow stochastic, oversold buy, north of the equator. I still like it long, but please remember gold's been very volatile for the past couple of weeks. May has been a tough roller coaster, Dramamine kind of month for gold. All right. Our next question is, let's see, Costco. Sure. Costco, lots of chop. Let's let Costco figure out what it wants to do with itself. I don't see a lot of clarity on Costco at the moment. All right, question from our free training room from Kiva, who asks, My charts look different. Different from what, my friend? Same charts. I'm on TradingView though. So for those of you that are wondering, yeah, Ron, these don't look like Thinkorswim. Very astute. Kiva, they are not. This is TradingView. I have the wonderful visible range volume profile on this screen. We have the multi-charts. We have the slow stow, grab candles, propulsion, all the good stuff. I think these are gorgeous charts, but maybe that's just me. Good stuff. All right, next up is Tesla. Taking a look at Tesla. Tesla has been the laggard in the XLY. It's been the laggard in the Qs. And I still don't see a lot of reason to be too bullish on Tesla. It's at least no longer in a downtrend. And if it's not in a downtrend, we can be open to the long or short side. What I would say is if I'm going to take some sort of swing, short-term swing, I would go to a 1-hour time frame. I would use a more sensitive read about the market structure, which is what a 1 hour will give me. And I'll rely on volatility-based support and resistance based on my daily price movement ranges and just play those small ranges until Tesla wants to join the party and move higher and get above that 200 propulsion. For now, Tesla is the oddball in what has been a lot of strength in key high concentration weighted stocks in the tech corner of the market. And yes, Tesla is weighted heavily in tech and it's heavily weighted in consumer discretionary, number 2, just after Amazon. All right, so next up is gold on the weekly. Back to the gold question. So if I'm going to set up gold on a daily versus gold on a weekly, different levels, different structure. So agreed, weekly gold is quite strong. But remember, if I'm looking at weekly gold, that's not necessarily going to map to a daily time frame entry because a weekly setup needs weekly volatility, weekly patience, weekly risk, and weekly reward, right? As opposed to daily. So I'm not a big fan at all of multiple time frame confirmation because what happens in my experience, I see traders that might set up a trade on the daily chart of gold, take a whole lot more risk than they normally would or should because the weekly is saying, well, this is up or down or whatever the direction may be. So my advice is stick with one time frame because that one time frame is going to have its own target, its own stop, its own entry, and its own risk. But if I start to trade daily gold with weekly risk, buckle your seatbelt. It's going to be a tough one. All right, next up is Cisco. Let's take a look at that, CSCO. I really don't have any interest in Cisco yet. I think that ultimately what we could have is a really good battle at the 200. Let's figure out who wins that battle there, and then we'll come in after, right? Let the melee, let the mosh pit happen. We'll come in after. Trade this intraday, but I would not chase a candle like that higher. All right, there's a question about the Russell. We've been talking about the Russell in This Week in the Markets, which is the newsletter I put out every Monday morning. You can check out a $7 trial at thisweekinthemarkets.com. My Sector Secrets Mastery, folks. This is, of course, included in your membership. And one thing I've been saying is do not get bullish on the Russell until we can find at least some strength in KRE. So until KRE can start showing a little bit more stability, watch the Russell in the back and forth of this range because it's only going to go where the KRE lets it. Why? Because over 20% of the weighting in the Russell is in bank stocks, is in that financials corner. So shout out to the bot. She loves trading the Russell. We have a number of people that also love trading the Russell. But remember, it's going to go where KRE lets it. All right, gang. As always, thank you for joining me for our Caffeinate and Dominate 20 minutes. Have a great trading day. Remember, we have a lot going on in the economic calendar. Check out Forex Factory. Check out Trading Economics, whichever you prefer. Some guy named Powell is speaking today. All right. And by the way, quick update to the schedule. I'll be doing the Ask Me Anything closing session today, also in the options room. So options, folks, I haven't seen y'all in a while. I'll be there for the close. Bring your questions, bring your symbols. We'll have a great hour together to wrap up the week. All right, gang, be good to each other. I'll talk with you soon.